This is our video blog for December 14th, 2010. Starting with the euro dollar, you can see the daily and weekly trend is up, the monthly trend's down. The price is above the hourly, so it's more likely to go up. You have this Fibonacci area that I projected to be a likely high. It's usually not a good idea to buy right in front of major resistance. The market did appear to have more upwards momentum than downwards momentum, so you might have got into this little sideways flag pattern right here, and it went up to the fib level and kind of ran out of steam. Because it broke through the previous week's high, monthly pivot level, and also slightly overshot this fib level up here and had extreme strength, our trend explosion system has you looking for buys as on a pullback, came down and did a retest at this now support area. You might have got into the trade right here, and you always want to draw your fib on the last wave up to get an idea of where your profit target is, and it went a few pips shy of that, and you would have got out of your trade up here. Because the market is strong, you don't want to look for any kind of counter trend trades up here, but once it does pull back and comes back up and tests this fib level, tests the monthly pivot level right there, and has off the charts weakness, you might have gone short right here with this as your likely profit target, 20 pips down. The next area of support is all the way down here, which it shot to. So you're short somewhere up here around 43, and you want to get out of your trade here around 75. That's good for an over 50 pip move. The weekly trend's still up, and as you can see here, it found support at our other fib level, which is usually does have massive buying like this. It goes sideways and there's no weakness anymore. Because you have absolutely major support underneath here, you might have gone long right here with these areas, clusters of resistance as your likely profit target. Good for another 30 pips. Pound dollar, the daily and weekly trend is up, so you want to focus on buying, especially when it's above the hourly. This little sideways rectangle pattern breakout, you might have went long right here, had a losing trade, got long again, and it went up to our fib level up here, where because it had almost no strength, you definitely want to exit trades at major sell areas when there's no statistical strength. When there is statistical strength, as you can see here, trends keep pushing and pushing. Typically when they hit major sell areas with no statistical strength, it does what it did today. It stalled out. Notice our trend reversal triangle oftentimes is the end of a move. You can see it was a little bit early yesterday, but that was the end of that move for the most part. And you're stuck here in between major support and resistance, so you really don't want to do anything until the market really breaks out above this fib level here, or this low right here. We have a narrow range for inside bar on the hourly chart, so this is a great short right here. This is your first profit target. I would have exited half because it looked at the stall there, and then it came down to this fib target down here, which it had pretty decent amount of weakness. I would have got out of the whole trade and missed, the way I trade, I would have missed this remaining move, because most of the time the lower containment band is the end of the move, and you can't beat yourself up if you follow your rules. In this case, I would have missed this other 75 pip drop. Dollar Swiss. This is a currency that our FX Total View has shown you that it was down 4 days in a row. However, yesterday was extremely weak, so you got to be really careful looking for counter trend trades at the lows today. When this came back up to the hourly, that's a great place to go short. This is your profit target. That's a trade I would have taken. And because of the extreme weakness, our trend explosion system would have had you sell this 2-hour sideways consolidation. But because it's been down 4 days in a row, you're really not looking for much profit on this move. I probably would have got out of my trade right here at 24, short at around 45, made 20 pips there. And I can't buy down here because it's extremely weak. But when it goes up and double bottoms right here with almost no weakness, this is called our double bottom with divergence. This is a great trade because, again, it's been down 4 days in a row, and you can see it shot from about 9,600 all the way up to 9,650, which is the previous day's low. And we have a trend reversal signal here, and on the way up it wasn't that strong. Aggressive traders might, because the daily, weekly, monthly trend's so weak, you draw your fibs on this first little move. It's also kind of a mini Elliott two-wave pullback system here. Might have gone short and made 20 or 25 pips. And you might have bought again right here. That would have turned into a loss, and now it's very likely to reverse again because it's been down 4 days in a row. We're in there, and we'll see later today how that trade panned out. Dollar CAD also down 4 days in a row. So knowing that gives you a huge advantage. Yes, the daily, weekly, monthly trend's down, but when you see a currency come down with almost no weakness like this, and especially after making a two-wave move, you draw your fibs on here, came down to the 1.618 fib level, which is also a monthly pivot level. There's no weakness. Aggressive traders might have got into a scalp trade there with either this as your profit target or up here. What I oftentimes do is buy the breakout when it goes from below back above the hourly after a currency's been down 4 days in a row. And this would have been where you would have got out of the trade. Notice it really wasn't that strong on the way up. It came down and double bottom there again, so you buy this breakout here. You might have got out of half your trade here, and your fib target, again, very likely to be the end of the move, which it is. Now, this had extreme strength, so you're waiting for a little pullback in testing this support area to buy, but it went right through it. So unfortunately, I wouldn't have shorted there, but when it broke underneath the hourly, came back up, couldn't get above it, I'd go short right here. Probably would have got out of most of my trade right here because we're looking to buy the lows. And then when it came down and hit the fib level, again, not that much weakness. We're in this trade here around 30 or 35. We're up about 10 pips, and that would be a trade that you would want to take because the currency's been down 4 days in a row. Australian dollar. This currency's been up 3 days in a row, so it's a very strong currency. You certainly want to look for buys when it's above the hourly. You have two narrow range 4-hour patterns right here and a breakout over the previous week's high. You might have got into that trade. It went up about 10-15 pips, pulled back. Whether you got out of that trade with a break even or not, it's up to you, or made 5 or 10 pips. Then when it goes sideways and breaks out again, you get in. This is your first profit target. This is your second. We are expecting this to kind of run out of steam up here because it's been up 3 days in a row. I would have probably got out of my entire trade here. It's pretty strong at the time, so you don't want to sell it yet. But as it goes sideways right at this monthly pivot level right here with almost no strength, because it's been up 3 days in a row, you're looking to sell, and it came down and kind of stalled right at the previous day's high. You want to get out of the trade there. And you might have sold this 1, 2, 3 pattern right here, usually getting into trades or out of them at the fib targets in the hourly moving average is a good thing to do. So you would have been out of that trade here. This is a perfect example of our Elliott two-wave pullback trade. Whether you got in that trade and stopped out in the first one, the second one shot up about 35 pips. You also have some patterns on this chart too. A nice little pennant flag pattern here. It made a higher high, pulled back. There's slightly more strength on the way up than here, and the daily, weekly, monthly trend is up. Flag pattern pennants like that are usually good trades. New Zealand dollar, the weekly, monthly trend's down. So you might have looked for some sells last night that didn't work. You had a few tiny losses. And then it breaks above the hourly right here with incredible strength. Another perfect pennant pattern. And you draw your fibs on there. Because the weekly and monthly trend's down, you're not expecting to make more than the fib targets. So when it shoots through the first one and stalls at the 1.618, you want to get out of your trade there. And we have the 20-day moving average and previous day's high up there. It also is a perfect example of currencies when they go up with falling strength, usually are going to go into the direction of the longer term trend, which for the most part was down. So you look to go short here. This would have been your profit target. The next profit target's here. You get out of your trade right there. And it went sideways there for a while. You also have another flag pattern right here. You might have bought the breakout because it found support here and it was losing its weakness. And you could have made 10 or 15 pips on that trade. Euro yen is a perfect example of a currency not to trade. You have fib levels here, fib levels above it, previous day's high, monthly pivot level, weekly pivot level, tons of buying and selling areas. You also have the previous week's high down here. So it doesn't really have that much room to run. This is a perfect example of what LA freeways look like during rush hour. If you have a sports car, you really can't get it up more than 25 to 40 miles an hour. You're not going to want to trade during a rush hour with lots of consolidation and slow levels. There's likely to be selling here, buying here. It's likely to chop around and be sideways. Once it broke through this low, then this would have been the next profit target, and this is your next. You could have gone short there if it had broken down, but it never did. And there's tons of resistance. If it had shot through the upper fib level, then you could consider buying it, but this is one that you just absolutely wanted to avoid. This one has the daily, weekly, monthly trends up, and so therefore you would have bought the breakout of these double narrow range patterns, shot up about 15-20 pips, enough to move your stop to break even, and then it collapsed. And so anytime you have a false breakout of narrow range patterns, usually it trends the other way. I wouldn't have gotten short right here, but when it retested the hourly right here and couldn't get above it, you look to go short right here, and here's your next profit target. This is an excellent trade mainly because of one thing. There's no support all the way down till here. So if it does break down, you're likely to make 30 or 40 pips. And in this case, if you sold the hourly right here around 132.25, it stalled all the way down here at 131.50, and you made 75 pips. And because it's extremely weak, it's likely to continue trending down. You want to wait for some kind of a pullback. You might have gone short there, made 10 or 15 pips, and as you can see, the weakness is gone. That's about it for that pair. Australian dollar, the daily, weekly, and monthly trend is up. However, it's underneath its hourly moving average. So you might have actually gone long right here. It barely went up 10 pips, so you would have lost 5 pips on that. And because it's not that strong, you might be careful not buy the second time. It falls. It's also not that weak. It didn't really make that much of a lower low. And so when it went back above the hourly, you might have went in here, or when it did a retest and touches, once the resistance area is broken, it becomes support. And when it comes down there and it proves to you that it can't go lower, the daily, weekly, monthly trends up, you want to get in it, and you can see this thing shot up about 40 pips. Not a perfect pattern, but whenever you trade in the longer term direction, weekly, monthly trend, your odds are much better. This is also an example of a currency not to trade because the weekly trend's down, the monthly trend is slightly up. It went down to the previous day's low without a whole lot of weakness last night, but you don't want to buy down there because the weekly trend's down. You have major selling areas above you, and you know, I don't see a single trade on this chart I would have taken. There was no momentum to the upside or downside, and our currency meter more than likely would have New Zealand yen. Let's look at the New Zealand. Lots of strength here from 2 to 7. Notice for the most part the yen's also strong. So you never want to trade two strong currencies against each other, or you're going to get really horrible choppy price action like this the majority of the time. Dollar yen, here you have two narrow range patterns, and it's underneath the hourly. Unfortunately, the weekly and monthly trend's up, so you're not likely to make too much by selling this, but it did break down. You go short. Counter trend buy signals right here, not a whole lot of weakness. You're out of your trade. You might have sold out on this next move up here, and this is your profit target level. If that gets broken, this is. If that gets broken, our trading zone projected lows likely to be the low of the day when it's underneath the containment band. So that trade ended up working. The weekly trend also had shifted down, and you might have looked for an Elliott two-wave fib pullback, drawing your levels like this. Shot above the first and second one, so that kind of null and voids the whole Elliott two-wave concept, and you had incredible strength on the way up. Our trend explosion system, every time you see weakness like that, you look for a pullback, and this is your profit target up here, and you're out of the trade. CAD yen, weekly and monthly trends up, daily trends down. However, you have major selling areas right here. So until this fib level gets broken, you don't really want to buy right in this zone. The weekly trend's up, so I don't know if I really would have looked to sell this. But once it breaks underneath the 10-day moving average, comes back up to the monthly pivot, can't get it back above it, you might have taken a stab at this. But this is your profit target. I would have exited half here, and then it worked its way down and went sideways. I would have exited the second half here. Notice it's not that weak. Because the longer term trend is up for the most part, you might have got into a trade here, and this is a perfect 1, 2, 3 pattern. Watch our video to explain that. We also have a beautiful Elliott two-wave trade as well from here. Notice it went up to the 2.0 level. You go short, it pulls back. There's less weakness on the way down than strength on the way up, so you might have got into that trade there. But I would not have myself, because you have all this sell area that's likely to stall the price. Now in this case it shot through it, but most of the time these areas tend to stall price, and you usually don't want to take trades that aren't likely to give you 1.5 to 2 times more than your risk.